Stocks have been alternating between gains and losses over the past 14 sessions. Now, Keith, what is the reason behind this choppy action and what will it take to break it?
Well, there's a big debate going on right now. Should the market actually be this high? So you've got the bulls really battling with the bears right now. The bull case, of course, is that they'll say that the market is fairly priced and corporations are flush with cash and they're soon going to be putting that cash to work. Of course, the bear case, which I have to say at this point in time, I've ridden this rally, but I have to say at this point in time I'm starting to side with, is there certain intermarket trends that have broken down inside. We got some bearish patterns in some of the small caps as well as the transports last week, which did not coincide with the rally on the broader market. They're starting to correct a little bit, but we still have some bearish trends in there. If we rally up through this week, earnings reports come in and send this market soaring, then those bearish indicators will go away and we will set all-time highs in the S&P. In fact, we could do it today.
So do you think that first quarter earnings season is what's going to fuel a rally?
At this point it will, yes. So people don't really care about what's going on in Europe, so it would seem. Japan has made their move with their stimulus programs. You're going to start seeing money actually flow out of Japan in the Asian market, possibly over to Europe and then over to the United States as people seek out yield. And then first quarter earnings we're really going to pay attention to, and it's not going to be so much the old line industrial companies, which is what I was looking for in the fourth quarter, but now we're going to look for the financials in the tech sector. The tech sector has really lagged this market run-up right now. And depending upon what they say, particularly around the semiconductor space, not necessarily the PC makers, they're dead, I don't care about that. But what are people doing inside of the semiconductors and the real innovators? If they say our sales are going to be blowout in 2013, then you're going to see this market really rally, being led by those earnings. We'll start getting some of those companies reporting next week, and they will come in fast and furious the week of April 22nd.
Now, tomorrow the FOMC minutes come out, the March FOMC minutes. Any expectations of changes in the size and scope of the bond purchasing program?
No expectations at all, which is another factor which goes into the bear case. If the economy was really improving at great guns and Chairman Bernanke and the FOMC could look out over the horizon, see the economy really growing the way they wanted to, then they would start pulling back the reins on the stimulus program. They're not doing that right now, so there's something that they're not telling us, which we can infer by their own body language, which tells us about the broader economy. And I think you see this. I mean, this is an economy that unfortunately is driven on debt and consumption. The savings rates of the American population is hitting all-time lows. We have more people on federal assistance every month, and we have the wealth effect taking place with increasing property values in the equity markets at all-time highs. That is making people spend money because they look at their brokerage statement every month and they look at the latest home sales data and they say, well, you know, our other assets are rising in price, so let's go spend some money. So I think the Fed wants that to happen because they know that's the only way the economy is going to start getting traction from all the stimulus they're doing. So they're going to keep throwing money at it. That money's going to find its way into asset markets. They're going to keep lifting up, and it's going to make people feel wealthier, and they're going to spend more money. That's the follow-through effect from a macro standpoint.
Thanks, Keith. This is Andrea reporting for TheStreet.